All right, welcome back into Market Day Report. I am Scott Shelley, otherwise known as the Cow Guy. Thank you very much for joining us. If that's what you're doing, if you've been with us all day, it's my job to make you stay. See if we can get some help from these markets. Why don't we bring in the corn board and see what that's doing? It's lower here by about 4.25 cents. 6.73 is last. We have been about 5 cents lower. That's the low. 6.68 is the low. We're 4.5 cents lower in March, right behind it to 6.78.5. How about soybeans? Well, soybeans are up 8 here in November, 14.56.5. That's some pretty good going. We in the middle of the day's range though, so we have been higher. 7.75 cents higher in Jan to 14.63. All right, let's take a look at wheat in Chicago. This is where the wheels fall off, and they do. Diesel is down 33.25 cents to 8.26.5. 7 cents off the lows. March is down 32 cents to 8.42 3/4. Hard red wheat in Kansas City, the old HRW down there, 31.5 cents lower to 9.03 3/4. Still have a 9 in front of it, I guess. March, that's the positive. March is down 31.5 cents to 9.02 3/4. All right, let's take a quick peek at spring wheat. What's that doing in Minneapolis? That's down 19.75 cents to 9.19. March is down 18.75 cents to 9.26 3/4. And cotton, let's see what that's doing here. It's been ugly, and it's down 359 points in that D's contract to 95.70 after being limit on Friday. So we'll keep that in mind as we move on over to our next guest analyst. That would be Todd Horowitz from Bubba Trading. He's in Las Vegas. Todd, thanks for being on the show. What are your thoughts so far today with this trade?
I just think it's more of the same, big nothing. I mean, we're lacking volume. We do have the FOMC on Wednesday, which is, nobody equates the interest rates to farming, but it's a big portion of it. And, that's, I think, keeping the markets in general in tow. We've seen, pretty dramatic swings back and forth in equities. And I think that, we took a little bit of a hit, but it's right down on support once again. And the overall movement looks like it wants to go higher. And I believe that it will eventually go higher here as we start to get closer into harvest.
It just seems like when we start worrying about how high rates are going to go and what that's going to do to the economy, are we in a recession or not a recession, and those types of things, or at least that conversation bleeds over into commodities, oil for sure. If we don't have any bullish news, it just seems to weight us down, doesn't it?
No, I mean, if there's no positive per spin out there, then you get some sellers, you get some of the funds trying to push it around a little bit, which they can. I mean, certainly thinner markets are thin. So, yes, it does create, but, at the end of the day, it'll come down to supply and demand, and there is not enough supply to meet the upcoming demand, and that's the way that I would continue to look at this, because that has not changed. And in fact, I think it's changed, if at anything, to the worse, yet we continue to see sometimes pressure on these markets.
Yeah, I'm talking to some other analysts, over the weekend and shooting some messages back and forth. If it wasn't for the negative news on the economy, they think that, we're pipeline levels maybe in corn, and is this small crop going to get smaller when it comes to beans? I mean, there's a lot of things out there to worry about going forward. And it just seems that right now it kind of the wind gets taken out of those sails because of, hey, are we going to have a 1% rise on Wednesday or a 3/4 point? Those types of things coming in, beating up the economy. Don't let anybody really get on their feet when it comes to the commodities.
Yeah, I think, listen, we've become a much more news-driven society, with the internet and with the flow of information and the nonsense that goes on here. I mean, if you're in a recession when you look at your own bank account and you're spending more than you're taking in. And you know that there's some issues that we are not addressing. We continue to hide from them. And again, it's pretty simple. There's going to be a shortage of food. There's going to be some problems out there. And that has to either bring prices higher or slow production going forward. So either way, it is not a good sign, which would lead to higher prices.
I mean, I think we both could sit down and write down 8 huge things that we need to kind of be leery of going into the fall. And those are real big market movers. And we just seem to be kind of, I don't want to say whistling by the graveyard, but just we're kind of numb to it right now. We'll see if that actually is the case. But anyway, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz. He's in Las Vegas with Bubba Trading after these messages. All right, welcome back to Market Day Report. Let's jump right in and take a look at what these cattle prices are doing after we've been open here for a while now. A couple, 2.5, 3 hours. Let's see what live cattle are doing in Chicago. Well, October is up 20 cents. There you go. Still slow. 145.70 is last. That's just off the lows, though, so we've kind of sunk back in here. We're only about 15 cents off the low, so we'll have to keep an eye on that one. That's 20 cents lower in the December, right behind it, 150 spot 77, and that's 7 cents off the lows right now as we speak. Let's get back to the feeders and see what's going on over there. Feeder cattle, well, they're up here, but not by a ton. Actually, if we go out to March, are up, but it's right in the fronts. October's up 90 cents, 182.15. We're up $1 in March, going out the deferreds. That's at 187.92. Not bad. All right. Let's take a look then at lean hogs. What's the lean hog market look like here? October in the front is off 37 cents. Doesn't know what it wants to do. 96.52 is last, and that is about, what, 47 cents from the lows. But everything else is higher between, say, 7 and 27 points. We've got, say, Fab in the middle of the deferreds. That's up 25 points to 91.90. Let's get back to our guest analyst, Todd Horwitz. Bubba Trading. Todd, we got 45 seconds. What are your thoughts?
Listen, I think we're fairly priced. I don't think there's a dramatic amount of room to the upside. I do not think they're going down. I think that the cattle is going to go, whatever crude's doing, cattle is going to probably go the opposite, and hogs are the next step down for protein. Either way, I think they stay or work slightly higher. A dramatic up move I don't see, but I don't see them going lower either.
So are you in the camp that there's just not a lot of upside, getting massively short here, taking a risk on that one? You just want to kind of stay long to neutral?
I want to say either long or flat. I think that they're in good shape. I don't think there's going to go. I don't think they're going down. I just don't think there's a dramatic amount of room to go up unless there's some major event, like an illness or disease in the cattle markets, like we saw years ago.
Right.
Other than that, I think they're going to stay around here and churn within this consolidation range in the 50, 60 point range, and that's about it.
All right. Great stuff. Great content. Thank you very much. Todd Horwitz, Bubba Trading, Las Vegas. Really appreciate you being on the show. All right. We're going to bring it back here to Nashville so I can throw this back over to Janet.